Okay, so right now, crypto getting a little bit of a bid as the dollar has fallen. Per the chart, we're in this bigger wedge pattern. So again, if I zoom out, this is pretty remarkable wedge pattern where you basically had the all-time high down sloping trend line. If we can break above that, it gives you a little bit of a short-term short squeeze on Bitcoin. Overall, I don't see it lasting for very long, and I ultimately see more downside. Right now, my high-end target on Bitcoin is around the 12 to 13,000 level, which would put us right down here at this pivot. Right now, we're still hovering around that 2017 all-time high before the last bear market. But I do think eventually it gets pushed below this level and collapses down to, again, 12 to 13,000. I know a lot of people have heard the headline of, like, Gareth says it could go as low as 3,500. That's kind of a worst case scenario for me, where if we really see, the financial markets collapse, we know that Bitcoin kind of follows the financial markets. It hasn't become a kind of a goldish type thing yet. Then you could be looking at a $3,500 target. Long term, I love Bitcoin. I think there's a huge place in the economy, in the global economy for it. But again, cycles are cycles, and we can't deny the fact that, number one, we're in a bear cycle. Number two, this is the first bear cycle that you haven't had Fed printing of money, which means it probably is going to be a worse bear cycle than past bear cycles. And we haven't even corrected 80% yet, which is what the past cycles did. So you have to kind of take that into kind of analysis. Where I get my $3,500 target, if you compare the .com era to the last couple of years in crypto, where you saw Dogecoin and SHIB and I mean these crazy meme coins, and some of these coins going up thousands and thousands and thousands of percent. If that was the equivalent of what happened in the .com era, and Amazon in the .com era collapsed 95% before going up tens of thousands of percentage points, then you have to think maybe a 95% correction in Bitcoin could occur, in which case you're looking at 3,500.
Hello and welcome to Money Talks. In today's video, President and Chief Market Strategist at InTheMoneyStocks.com, Gareth Soloway, updates about the current situation of the global economy, the key factors behind Bitcoin crashes, and whether or not inflation is as bad as the media says. Gareth Soloway also talks about the severity of the bear market and why he expects a 95% correction in Bitcoin's price in the coming days. Make sure to stick around till the end of this video, where Gareth Soloway reveals the concept of a multi-year bear market in cryptocurrencies.
I do think that we are headed into a global recession, but remember that recessions don't, the markets don't trade in a straight line. So you're going to get to these technical levels where people get overly bearish, and then you get these technical bounces, like, for instance, when the Bank of England does something like this. And then what you'll see is people start to sway and start to get bullish again. And then as soon as they start getting bullish in a bear market, you have to be on alert that it's likely not going to go too much further. So I don't think, for instance, a one-day bounce is all we're going to get here, but I certainly do think we are going to go lower across the board on all stock markets and really start to head lower. I'm kind of isolating down, and I can show my S&P chart here.
Sure.
SPX. There's a pivot point that I'm watching. So number one, notice where we bounced today. We bounced right at the lows from June. So a technical support level right there. I think this is a short-lived bounce. You might get a week, week and a half, 2 weeks out of it. But ultimately, we have to go retest the pre-COVID collapse highs right here. So that's down around 3370 on the S&P 500. And that makes a lot of sense, right? If you think about the Federal Reserve sucking all this liquidity out of the market, it makes sense that we have to go back to the pre-period before all this liquidity was put into the market. So that would be my next stopping point. I think by year end we get there. I also think, on a basis, I'm going to be looking to buy this level right here, just because it is such a psychologically technical level right there. So there'll be a bounce off of that. But again, I'm in the camp where you're going to have two cycles to this bear market. The first cycle we're in right now, which is a cycle where the Fed is tightening, there's no more money printing, and so valuations have to come down. The second cycle is going to be after the Fed pivots, right? So the Fed is going to eventually pivot. We saw kind of the Bank of England already do that, right? So at that point, you're going to see a big bounce in the market because the Fed is pivoted. Everyone's going to say, oh, they're going back to easy money policy. I don't agree with that. I think the pivot is basically just not hiking rates anymore. And the next cycle is going to be when the economy slips into a recession, and that without Fed printing of money, if you think back to every past big market drop, whether it's a recession or it was COVID or whatever, the Fed has been printing us out. And so with inflation still staying above 4%, I have a long-term horizon of like multiple years where inflation is going to be 4% or so. The Fed cannot print us out of the next recession, and the market is eventually going to realize that. And that's going to be a big earth-shattering factor for the overall market, where they're like, wait a minute, how does the economy get out of this recession without the help of the Fed? And that's where you see that next leg down, where people say, okay, now we could be in a recession for years. I mean, it could be a multi-year recession, not just a 6 or 12-month recession period.
For bulls, Bitcoin's daily price action leaves a lot to be desired, and at the moment, there are a few signs of an imminent turnaround. Following the trend of the past 6 or more months, the current factors continue to place pressure on BTC price. Persistent concerns of potential stringent crypto regulation, United States Federal Reserve policy, interest rate hikes, and quantitative tightening. Geopolitical concerns related to Russia, Ukraine, and the weaponization of high-demand natural resources imported by the European Union. Strong risk-off sentiment due to the possibility of a U.S. and global recession. When combined, these challenges have made high-volatility assets less than interesting to institutional investors, and the euphoria seen during the 2021 bull run has largely dissipated.
Yeah, and again, I know that sounds really scary, but like I think the best thing to do is look at like other markets that have gone through this, right? So number one, if you looked at the Nasdaq in the .com period, it had this insane move. In fact, let's go to that now. In fact, let's take a look at the Nasdaq chart, and then I'm going to go to the monthly chart just so we can see back to 2000. Look at the vertical nature here, and by the way, look at how big this is compared to this. I mean, that's how scary this market is. But as you can see, I mean, you had generally a pretty big drop, but there were some big bounces along the way. And then you went into this kind of sideways to up, like almost like a bull market within a bear market period, where you actually could make money by just going long. Just the highs were not taken out for 15 years. I think it is because it creates this fear and panic in the investing public, which then reacts, right? So it's going to that psychology of an investor. But the beautiful thing about it is the charts are amazing in that they tell you when the changes are going to come. And
Bitcoin's sell-off from March 28 to June 13th sent its Relative Strength Index, or RSI, to a multi-year record low, and a quick glance at the indicator compared against Bitcoin's longer-term price action shows that buying when the RSI is deeply oversold is a profitable strategy.
And this is one of the things I pay attention to. I do follow Twitter, not because I think it's a great asset for me to trade off of, but in fact, it's a great asset for me to use as a contrarian indicator. And the key to a good investor is being able to figure out when it's at these kind of maximum megaphone periods where it's just overwhelmingly biased in one direction. And then that's usually the inflection point.
What else do you use for that? A fear and greed index or something else?
Yeah, so the fear and greed index is okay. It does give you a general sense, but I haven't found it to be a great for like exact reversals. I would tell you another thing to look for is like I'll tune into the financial media, and the financial media, like, you know, you'll have on, you know, CNBC here in the US and they'll be talking all bearishly and all this and that and like, oh, this is so scary. And you can almost gauge from that when it's really powerful that they are in one direction, that it's about to reverse.
So, do you agree with Gareth Soloway's concept of a multi-year bear market? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.